So housing markets in the Southeast and the West are seeing more inventory and softer demand, leading to price reductions, whereas people in the Northeast continue to tell me that they don't have enough inventory on the market, and they're driven by higher income growth and limited supply.
For the first time in more than a decade, the number of U.S. home sellers now dramatically exceeds the number of buyers. That's according to a new report from Redfin. The shift in buying power could cause prices to fall. For more on the latest trends in the housing market, let's bring in real estate agent Kirsten Jordan. Kirsten, thanks for joining us this afternoon. You know, you talk about where we were in the middle of the pandemic. It was a story about low inventory, low rates when it came to mortgages. We're in a lot different place now, aren't we?
It is so different right now, and it took us a minute to really adjust to these rates going up. And exactly what they're saying about the difference between what we're seeing in the South versus what we're seeing in the Northeast is that a lot of the insurance rates and in general what we call unsustainable price increases that were going on in the South, we're seeing those come down. And I think that's going to keep happening for a little while.
Yeah, you had a huge swing of people who were clearing out of larger, colder cities, moving to the Sun Belt. Has that slowed down a bit now that you're seeing some of these prices fall? Is that an indication that that move has really occurred?
We're seeing a really big change in this back to work movement, which I know we've been talking about now for years. If you think about it, though, when you're going back to work, or if you're in the early parts of your career, the 30s, the 40s, potentially you need to be in person to further your career and get where you want to be. And a lot of those places are in the Northeast. And then obviously there's the elephant in the room, which is the cost of insurance. And as we're seeing in Florida, especially for those affordable homes, those $300,000 to $600,000 under $1 million homes, the actual percentage of the home value and that they're dedicating to insurance costs is unsustainable for so many people, especially those people that are on fixed income.
The number of transactions that have been canceled, that's also up too. Why do you think that is?
This is so interesting that we're seeing that, especially the highest place that we saw it was actually in Atlanta, Georgia, which has been a traditionally, right, for the last 5 years, a big investor area, but we're also seeing it down in places like Miami, Florida. I really believe that this is coming from these insurance costs, and it is really coming from also seeing uncertainty. This report was from April, so we kind of have to close our eyes and go back and try to remember what was going on also geopolitically and what we were seeing, especially with the stock market, which doesn't directly affect the housing market, but it can make people extra skittish when things are going up and down. So there's a lot of different factors that we're seeing that are affecting these cancellations.
And you really are seeing two different markets here. There are those you mentioned under $1 million, the more affordable price range, and then the higher end, certainly where you are in New York City. What are the differences between these two markets, and how have they changed over the last few years?
The lower end of the market is where those costs and the cost of money, especially with the higher rates, is really hurting buyers. This is not a story of supply and demand as much as it's a story of high demand and low affordability, even though supply continues to rise. These buyers were really hoping to see that they were going to get a break when there was more inventory and prices started to come down. But when they really crunched the numbers, especially with the new cost of insurance, any cost of renovation, it's just really difficult for so many of them to get into the market. And then what we're seeing on the high end is that a lot of very, very wealthy have said, hey, everything's fluctuating big time. If I'm going to put my money someplace that's stable, I might as well put it in a market where I know that there's going to be sustainable demand in the long term. And that's why we're still seeing some of these very large trades in places like New York City. And I do still believe that we're seeing those at the very, very high end there in Palm Beach and Miami. It's just obviously some of those numbers we're not going to see necessarily as high as they were before, but in some cases we are.
A couple of years ago, mortgage rates shot up. They've stayed at that level essentially since then. Where do you think mortgage rates need to be before you start to see a bigger, it begin to spur more housing purchases, really juice the market?
The place where we need to be is probably something with a 5 handle. I think everybody's hoping that once we get into the 5s, we're going to see a tremendous push in demand or ability to purchase, because again, the demand is there. It's just the ability to actually buy something that's affordable. The reality right now, though, is as a real estate agent, I do encourage my buyers to get out there and understand the market right now. With these canceled contracts, the best moment to get in there and get a deal with a seller is right after they've lost another deal. So if you want to get in there right now, there's a really good chance that if you buy with the expectation that mortgage rates will probably remain pretty stable, you might be able to find some opportunity, and this could be that moment.
And real quickly, do you think there's enough new construction coming online?
There's definitely not enough new construction coming online. And for developers, they are getting annihilated. Remember, a lot of their borrowing rates are higher than what we see for these traditional mortgages for homeowners, for primary homeowners. So it's going to be really tough to find that new inventory. And in any place where there is new inventory that is ready to buy, that you can get at a discount, it's a time to jump on it, which is something we're seeing here in New York City.
Kirsten Jordan, thanks for joining us.
Thank you.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.